Are you wondering what stocks to buy when the market crashes? Well, in the world of investing, volatility matters. And people like you and I get reminded of this each and every time there's a downturn or a market crash. And on the stock market, you'll find that some stocks are much more volatile than others and experience huge swings in price. Now, it's great when the stocks go up, but when they go down, not so much, right? So what stocks do you want to own when the markets are crashing? Well, you want low beta stocks. You want boring stocks that won't come crashing down with the rest of the market. In this video, I'm going to cover some boring, low beta stocks that investors just love to own, especially when markets are crashing. But before I begin, since you're looking for information on quality stocks, I wanted to introduce Sure Dividend. Sure Dividend helps investors like you and I find high-quality income securities for their retirement and financial freedom portfolios. And the Sure Dividend newsletter analyzes their top 10 high-quality dividend growth stocks each and every month. And because they do such a great job, I want you to know that I use their service myself to research companies for the videos that I create here. So if you'd like to support the channel, go ahead and take a look for the Sure Dividend link in the description below, and stay tuned because I'll be giving you a promo code for a $41 discount off their newsletter. Alright, so without further ado, let's get started. So you're here because you want to learn about boring, low beta stocks, stocks that aren't that volatile, and stocks you might want to own when the market crashes. This way, your money could be safe. Well, for that, you need low beta stocks. So first, let's start with, what is beta? Beta measures the volatility between an index against a stock or security or portfolio. For example, let's say the S&P 500 is having a bad day. Say it's down 2% today, and you check your portfolio and it's down 5%. Has that ever happened to you? Well, in this case, your portfolio would have been way more volatile than the index. In other words, your portfolio would have a higher beta than the S&P 500. Beta reflects the price risk of your portfolio or stock against a benchmark, which is typically the S&P 500, and it's usually over a 5-year period. For example, a beta of 1.0 means that the stock or your portfolio moves in tandem with the S&P 500. So if the S&P 500 goes up 1%, so does your stock or the portfolio. And examples of 1.0 beta securities are usually index ETFs like the SPY, which aims to perform exactly the same as the S&P 500, and it does a good job of it. Now, what if you own a stock, let's say Apple, and today the S&P 500 is going up 1%, but Apple is going up double, let's say 2%. And give me a like if you know what that feels like. I know it feels great. Because when that happens, the beta is more than 1. Now, a beta of 2.0 means that the stock or portfolio is moving twice as much as the index or the S&P 500. So if your portfolio or your stock has a beta of 2, well, you could say it's riskier. High risk, high reward, right? Well, don't forget, it's genius when the markets are going up. But when they're going down, not so much. Next, we have negative beta. With negative beta, the stock or portfolio moves in the opposite direction. So if the S&P 500 is going up, well, then the stock or the portfolio is going down, and vice versa. And in case you're wondering, there's also zero beta. And zero beta means the stock or portfolio doesn't correlate to the index at all. Now you might be wondering, how do you find the beta of a stock? Well, you might find it at your brokerage, or you can do what I do and just go on Yahoo Finance. You can visit finance.yahoo.com, type in your favorite stock, and you'll see that the beta is listed just below the market cap. In this case, we were talking about Apple. And as you can see here, it has a 5-year beta of 1.2. And that means that over the last 5 years, Apple moves on average 1.2x the direction of the S&P 500. In other words, if the S&P 500 goes up, Apple goes up 20% more. And if the S&P 500 goes down, well, Apple goes down 20% more than the index on average. Okay, so now that you know a little bit more about beta, let's look at the 5 stocks investors love to own when markets are crashing. And you guessed it, they're low beta stocks. In fact, the following 5 stocks have the lowest positive beta values in ascending order from highest to lowest. They also pay dividends to shareholders. Starting with number 5 on the list is Gilead Sciences, a biotech company that operates with a clear focus on antiviral medication and treatments. Its main products include treatments for HIV, hepatitis B, and hepatitis C. But Gilead has also ventured into other areas, such as oncology. Gilead Sciences reported its third quarter earnings results on October 28th. The company generated revenues of $7.4 billion during the quarter, which was above analyst consensus estimates. Revenue grew by 13% compared to the previous year's quarter. Gilead generated earnings per share of $2.65 during the third quarter, which was easily above the consensus estimate. And Gilead has a 5-year beta score of 0.34. Next, we have Tyson Foods. This is a company that was founded in 1935 and is one of the world's largest processors and marketers of beef, chicken, and pork products. The company was founded by John Tyson, an Arkansas farmer who started off as a small businessman hauling chickens to Midwestern markets. Today, Tyson Foods sells products to leading grocery chains, food franchises, and military commissaries in over 100 countries. Their well-known brands include Tyson, Jimmy Dean, and Hillshire Farm. And last year, the company generated an impressive $47 billion in revenue. Now, on November 15th, 2021, Tyson Foods released fourth quarter and full year fiscal 2021 results for the period ending October 2nd, 2021. The quarter sales came in at $12.81 billion, an 11.8% increase compared to the fourth quarter of 2020. Adjusted earnings per share was $2.30 versus $1.70 in the year quarter. And Tyson Foods has a beta of 0.33. All right, so number 3 on the list of low beta stocks is Atmos Energy, a company that can trace its beginnings all the way back to 1906 when it was formed in Texas. Since that time, it's grown both organically and through mergers to a $12.7 billion market capitalization. The company distributes and stores natural gas in 8 states, serves over 3 million customers, and should generate about $3.7 billion in revenue this year. Atmos reported fourth quarter and full year earnings on November 10th, 2021, and results were somewhat mixed. Total revenue was $568 million in the fourth quarter, which was $10 million better than the estimates. Distribution operating income was up $5.7 million to $37.6 million, which reflected a $22.9 million increase in rates and a $4.2 million gain in customer growth. And Atmos Energy has a 5-year beta of 0.31. Number 2 on the list is Viacomcbs, an American multinational media conglomerate that was formed via the remerger of both the CBS Corporation and Viacom. The company's content brands include CBS, Showtime Networks, Paramount Pictures, Nickelodeon, MTV, Comedy Central, BET, and so many more. It also operates the Paramount Plus streaming platform. Viacomcbs has 6 different revenue segments, where advertising, affiliate, and content licensing are the most significant revenue source for the company. Viacomcbs has a 5-year beta of 0.25. And last but not least, number 1 on the list of low beta stocks is Quest Diagnostics, a company that operates in the healthcare sector. Quest is a major diagnostics leader that serves 1/3 of American adults and half the physicians and hospitals in the United States each and every year. The company generates over $10 billion in annual revenue, and the company has a significant competitive advantage, which is its leadership position in a large and growing market. Quest Diagnostics has a 5-year beta score of 0.17. Alright, so when choosing from 2 different stocks that are similar in terms of expected returns, but one offers a much lower beta, well, you might be better off selecting the stock with the lower beta, as it might offer better risk-adjusted returns. Oh, and before I forget, remember that promo code I mentioned earlier for the Sure Dividend newsletter? Well, because you've watched this video, you can go ahead and use my coupon code FIM41OFF to lock in savings of $41 a year and get instant access to the newsletter with a 7-day free trial. Check the link in the description below for more information. In the meantime, thanks so much for watching, and I'll see you in another video. Bye.